Welcome to the Army Empire Podcast, your go-to podcast for insightful tips on investment strategies, entrepreneurship, and all things money matters. Join Bernard Alerte, your guide on this journey to financial freedom. Each episode will dive into expert advice, practical strategies, and inspiring stories to help you take control of your financial future. Whether you're an aspiring entrepreneur or a seasoned investor, we've got something for everyone. So get ready to unlock your financial potential and make your money work for you. And now, let's welcome your host, Bernard Alerte.
Hello. Good evening.
Good evening. How are you doing?
I'm good, Bernard. Listen, I'm excited to be here yet again.
Yes.
To learn.
Yes, absolutely. Looking forward to it.
This is our last Tuesday podcast because starting next week, as we enter into the month of August, we are going to be on Wednesdays rather than Tuesdays, but the exact same time, right?
Exact same time. So we're looking forward to it because we can reach out a broader audience even then, because believe it or not, a lot of our viewers, a lot of our clients, a lot of times I find that they actually go to Tuesday night service, prayer in their church, Tuesday night prayer. A lot of them. I didn't realize. I thought it was all church, but I realized there's so many different churches that do Tuesday night prayer.
Yes.
In that time. So it's hard for them to say, oh my God, it's hard for me to log on during that time. So it might work. It might work out for the best. Actually, it might work out for the best. So we're excited about the new chapter. And as we work towards the number 100.
Number 100. Listen, and of course, we have some faithful viewers like my husband. He's saying good evening to the dynamic duo. This is going to be another great topic for you all that is going to be on our YouTube catalog that you'll be able to see. This one's going to be really easy for me to figure out because sometimes I'm looking at the catalog and I'm like, which one should I put this one under? Should I put it under marriage and finances? Should I put it under IRAs or investments? Today, we are talking about, what is this?
Different. Listen, we just came out. We had to come out with a little theme. Life with the soccer, the World Cup just ended, right? So let's have a little soccer thing going, all right? Difference between a life insurance agent versus life insurance coach. And we talked about this topic in the beginning a lot. I think we had an episode talking about it, but we're gonna take it another step further so people can see we show the difference in so many ways, but we're gonna show it in an even more impactful way. The difference between life insurance and a life insurance coach.
Okay, so we're going to break it down. Bernard's going to break this down for us so that we're able to understand the difference between the two. All right, let's do this thing. Here we go.
Exactly. So people ask you, magic question, what's the difference between life insurance? Because sometimes I like when I sit down with someone and let's say they have life insurance already, and I like to ask them the magic question just to see their face, right? A lot of times, listen, who did you get the life insurance from? Did you get from a life insurance agent or a life insurance coach? And I asked him that question. They said, well, I think an agent, I think a life insurance agent, and they always ask, what's the difference? I'm like, the difference is everything, right? And like, here's the reason why. A life insurance agent will sell you a policy so that they can benefit and the insurance company can benefit. Versus a life insurance coach shows you how to use life insurance in an effective way so that you and your family can win the game and not the insurance company.
Ooh, okay. So this is huge. So you do not want to sit with an agent. You want to sit with a coach.
Yes. And I never want to say, oh, don't sit with life insurance. That's not the message I want to come across. But I want you to understand the difference, the value, and what does that mean? And what does a coach do in real life? What does a coach? A coach gives you plays. If you think about sports, a coach gives you plays so you can win the game. Well, a life insurance coach gives you plays so you can win a life insurance game. So you understand how to use life insurance in an effective way, right? For you and your family. So we're gonna go over a couple of different topics, and we're going to go over some specific way how to do it. So when people think about when you get life insurance, what are the 4 major benefits of life insurance, right? For example, we're going to talk about those 4 topics, right? Number 1 is people say, well, why is life insurance for, right? And there's 4 benefits, right? Number 1 is for final expenses, right? That's one of the reasons you want to get life insurance for final expenses. Listen, average, one thing is guaranteed life, we're all going to pass away. There's two things guaranteed life: death and taxes, right? The key is, the only challenge is we just don't know when it's going to happen. We all know her date of birth, but we just don't know her date of death, unfortunately, right? If we had a crystal ball that tells us this is the day, right? That's the day that we're going to go, then things will be different, but that's not the situation. We just don't know, okay? Now, final expenses. Now, which is most people think life insurance for final expenses. They look at it a certain way. Well, it's funeral. So they have a negative perception sometimes because they associate life insurance with death. Life insurance, death. No one wants to talk about dying. We all have this delusion that we want to live. We're gonna live forever, right? It's just something as humans, like we wanna live forever. We want to be able to, and we don't want to think about that. But it's just a reality in life, right?
Mm-hmm.
If you think about it, final expenses, is very expensive. Average funeral cost is about $10,000 to $15,000, right? A lot. Sometimes, even if you want to get cremated, you're gonna pay a couple thousand. It's just the way it works, right? So people think about, well, listen, the challenge with that is if God forbid you pass away, the worst thing that you want to do is, number one, is not only your family is suffering because you're not there anymore, physically there with them, person, loved one. Now they have to find money to bury final expenses, and we showed a couple episodes back, average person has $1,000 in savings.
Right.
Average person doesn't even have $1,000 to cover emergency. So imagine at the worst possible time when you're mourning someone that you're close to, then you have to find the money to $5,000-$10,000 to take care of that. Right. This is what people don't think about that. If you think about it, it's GoFundMe everywhere. GoFundMe is like one of the biggest GoFundMes for life is for funerals.
Funeral expenses. Yeah, I was about to say that. I mean, like, this is the last thing I want my family to do when I'm gone, is for them to have to set up a GoFundMe account so that they can bury me like that. Think about that for a minute. Is that what you want your family to do at the end? Absolutely not.
Absolutely. And it's sad, and it's sad to happen. But just people say, well, just bear, but that's not the point. Do you understand? They still have to, they have the decision. It's not your choice anymore. They have to decide.
Mm-hmm.
They have to say, well, just put me in a box. I'm like, well, that's very selfish, because that may not be how they want to remember you. I put such and such a loved one in a box. They want to be able to honor you, maybe be able to do that. That's their choice. But the key is, that something's important. So final expenses is a major challenge. So you want to make sure that life insurance covers that part. That's what it's designed for. The second is, it's called income replacement. We're going to talk about that today. We're going to spend a lot of time on that today. Income replacement. What does that actually mean? So let's say, for example, someone's making 50, 60, 70,000, whatever they're making, right? If something happens, God forbid, that 50, 60,000 stops coming into the family.
Right.
It stops coming in, but the family still has to pay the bill. They still have to pay the mortgage. They still have to eat. They still have to do these things, right? Life doesn't stop. Your family's life doesn't stop because your income. So what happens is, when something happens, you lose the income. So there's two losses that happen when someone passes away. You lose the person physically, and you lose the income, or the working power the person brings over their lifetime. Because you're bringing income, so you're losing the income that person was bringing in and will be bringing in the future.
Correct.
And you lose that aspect of it, right? So that's a major challenge. So life insurance allows you to have this. It allows you to have, if you have the right, have the same financial impact on your family, whether you are there or not. Because all of us, we have financial impact on our families. So life, if you have the right amount of cover, it allows you to be able to replace your income. Although you may not be there physically for your family, but the goal is to be there financially for them. Mm-hmm. And we've seen different scenarios. We've seen different scenarios where there was no life insurance, and what the family had to go through, struggle, the tragedy on the aspect of it. And we saw a different aspect where there was protection and there was something left, and how that family was able to they still mourn, but they mourn differently.
Correct.
They mourn differently. They mourn differently, in other words, right? Which is tremendous, which is very impactful, right? So that's the aspect income. We're gonna spend some time how that works, how to use that, what separates us from everyone else out there, right? What life insurance coach can do and life insurance agent can't do for you. And we're going to show you that, right? The third is terminal illness, right? Like, for example, it's also, that's a major tragedy that happens. Sometimes people think life insurance is not there for in case you just pass away. You can use it, part of proceeds, even while you're still living. Because a lot of policies have something called terminal illness benefit. That means, let's say, God forbid, somebody's terminally ill, for example. Sometimes you can use 40 to 70% of the proceeds up front. So someone's, let's say, has 100,000, you can use up to 40,000 or $70,000 of money up front. You can use that. You can use that. And you can use that for, let's say, for any expenses you might have. For example, you can use that, for example, if someone's terminally ill now, they can't work, for example, right now they can't work, or they're in the best, they can't work. And see, disability is not going to cover everything. So you might want to use some of the money just to take care of the expenses while you're still living, to make sure your family still, I guess, maintains a little bit. So you can use that if God forbid is a terminal illness situation. Or you can use some of the monies up front for different care. For example, when someone, let's say it's a situation when people, let's say someone got diagnosed with cancer, sometimes it's very limited how the medical community deals with that. Chemotherapy, radiation, and surgery. And as those treatments don't work, because everybody's, and we're not going to go into, it's very controversial, but everybody responds differently to different situations, for example. Sometimes it may not work for someone. So at least, see, there's a lot of other treatments out there, options that might work for someone and might extend some person's life. Or maybe I've seen it happen where a person was diagnosed and they got alternate treatments, for example, and they're able to live a little bit longer life, like still and be free. And listen, this is not the recommendation to listen to your doctor, but we've seen that happen. But those treatments cost a lot of money. They're not covered to insurance. They might cost 50, 100, 200, 300,000. How many people have that kind of money laying around? They don't.
Right.
So sometimes you can use some of that up front. So that gives you options, right? Terminal illness is very important. The fourth one is a legacy, creating generational wealth. Life insurance is the most cost-effective way to transfer wealth to your family, is to create generation wealth. Most of the wealth that's created, right, from generation, even from before, was through life insurance. They made sure that was transferred over, because it's the most cost-effective way, right, to transfer wealth to your family, right? That's something that's so important. If you think about it, it's the only, life insurance is the only bill out there that you pay that will pay you back. Every other bill that we pay, we actually paying somebody else's family or somebody else's business. Life insurance is the only bill that you and I will pay on a monthly basis that will pay us back. And life insurance, people need to understand, is the only insurance out there that you get that once you qualify for, you could cancel them anytime, but they can't cancel you, believe it or not. You can cancel them anytime, but they can't cancel you, because once you get approved for life insurance, they can't say, okay, we cancel. Listen, if you have health insurance, the insurance can drop you anytime. Anytime. If you have car insurance, company can drop you anytime. Let's say we don't want you, forget homeowners insurance in Florida. That they drop you all the time, right? It's just the way it works, right? But life insurance is the only insurance out there you get, protection out there you get, that once you get it, once you qualify for it, they can't cancel you. You are 100% in control, and they can't cancel you, but you can't cancel them anytime. Okay, that's one aspect, and there's only policy out there, insurance out there, that you pay a little bit, but you get this much. Where the risk is 100% with the insurance company, and you have zero risk ever on you. Right. So someone else is taking all the risks. The insurance company is taking all the risks. You're not taking any risks at all. Right? Because think about it. If someone pays like $100 a month for life insurance, for $500,000 of coverage, okay? Now, from the day, people realize, from the day you enter the contract, you sign the policy, you give the initial premium, the insurance company is on a hook for $500,000. So if you pass away, you're giving them $100.
Yeah, that's wild.
And you can give your family $500,000. We've seen situations where a client paid one initial premium, and 2 days later, unfortunately, they passed away. And guess what happened? In the insurance, they made sure they make sure everything's correct. There was nothing, everything was saying was true, then they actually paid the claim.
Wow.
So people need to understand that you actually believe it or not. But how do you get ahead? I'm gonna share some, and I talked about it before. But how do you beat the life insurance company? Let me tell you what life insurance companies want you to do. The way you beat the life insurance company is, number one, you get a cost-effective term policy. We always talk about it, and you never cancel.
Mm-hmm.
That's how you win.
Mm.
You get protection. Right, you get the protection, right? You get cost-effective term insurance because you're covered for a lot and you're paying a little bit and you never cancel. Because whenever you cancel, let me tell you what life insurance company wants you. They want you to cancel your policy. It's funny how a lot of clients think, oh, if I cancel my policy, they ain't getting my money anymore. What they're saying, thank you. Because we know you're gonna pass away one day, and we'll never have to worry about paying your family claim. So when you cancel your life insurance policy, you're not canceling on the agent, you're not canceling on the insurance company, you're canceling on your family.
Mm-hmm. Mm-hmm.
That's what you're doing. You're canceling on your family. You're not canceling on the agent. You're not going, oh my gosh. You're canceling on your family because your family is not gonna get the money. And the insurance company, they love when, let's say, you start paying and you stop paying.
Yeah.
Because think about it. You're on the hook for, I want you to think about it. You put $100 a month for the policy, right? That's $1,200 a year, right?
Mm-hmm.
How many years would you have to put $1,200 to amount to $500,000?
I know.
You have to keep the policy for 300 or 400 years to amount to $500,000. So understand, knowing that, there's not an amount of money that you can pay that'll add up to $500,000.
Yep.
There's not an amount of money you can pay. So understand something. So you are 100% winning here.
Mm-hmm.
You're 100% winning. Life insurance, I'm like, oh my gosh, people should be dying to go get life insurance and get a right amount of coverage. Because why? You can transfer, you can change your family's generation just like that.
Yep.
100%. So it's so effective. Okay, exactly. So those are four benefits of life insurance. If you add it, I didn't add investing. That's not a benefit of life insurance. It's for retirement, okay, or being your own bank, or any of the things out there people are telling you, or you can borrow your own money, be your own bank. That's not the purpose of life insurance. It's not a purpose for that. Okay, those four benefits is what life insurance is for. That's it. And anyone trying to convince you for otherwise is not telling you the truth. They're trying to give you, they're not telling the truth. Okay. Now, the question is how much life insurance somebody needs.
Mm-hmm.
Very simple formula. Well, we found a lot of people out there, they are over premiumed and underinsured. That means they are paying too much money for the coverage. They're paying too much money. They don't have enough coverage. Average claim death benefit that's paid out there was about, oh my gosh, I think 110,000. That's an average claim out there. That's paying for across the industry, right? Versus we pay a lot more claims. Listen, the last 4 or 5 claims that we paid, one was for 800,000, one was for 400,000, another one for 400,000, and another one for 300,000. Right? Versus out there. Why? Because we use this very simple formula called DIME. Right? Very simple. D stands for death. So let's say someone sit down with John Doe. So say, John, let's take a look at how much protection you need. Right? Death. So how much does the funeral cost? $10,000. Right? Let's go. That's 10,000. Let's add that $10,000 on the side. What income? Experts recommend we want to replace your income, John. So how much income? So experts recommend you have 7 to 10 times your annual income and protection. So let's say if you're making 50,000 a year, you need from for 350 times 7 is 350,000 to $500,000 per. That's how much you need. So you add it up, right? M stands for mortgage. You say, John, listen, your income pays for the mortgage. Would you like your mortgage to be taken care of? God forbid something happened to you. Someone say yes. Well, how much is your mortgage balance right now? This amount. That okay? Well, let's add that to it. Right, so we say, okay, let's add what that amount is. Let's say John has kids, that one that's underage, that he wants his kids to go to college. Well, John, would you like if something happened to you, God forbid, that at least some portion pays for your kids' education? Yes. So we add an amount towards that, and we add it all up, and that tells you how much protection someone needs.
Mm.
And I'll tell you right now, it's a lot more than 100,000 that
Right.
I'll be paying out, right? Sometimes you anywhere from 500 to $1 million, even more
Mhm.
for most people. If someone doesn't have a mortgage, you don't have to worry about it. But for average person, it's 500,000 to $1 million. Usually, someone needs, right? So we ask that and sometimes we ask very simple question. Well, Bernard, that's a lot of coverage. Maybe they can afford it. But this is where we ask the magic question. Listen, maybe this is how much you need, John, but maybe this is how much you can comfortably afford. So our goal is to get you as close as possible at the coverage that you need at the price you can comfortably afford.
Nice.
So we try to get people as close as possible because maybe they need this amount, but not based on a premium for that age, that person's. They can't, maybe it might be a little bit too much in their budget. So we got to get them as close as possible to that.
Mm.
So they can basically afford it. So let me share with you the power of income replacement. What separates us. And let me show this slide real quick. Now, what happens when someone passes away, right, Liz? What we try to do is say, listen, we want to be able to replace your income. So we use a hypothetical, and you may not see those numbers, but I'm going to show the numbers for you. That let's say someone has $500,000 of coverage. And we say, well, we want to make sure that 500 to replace your income. So how much you make a year? Let's say you make 50,000 a year. So our goal, right, is to make sure you can have $50,000 a year coming to you, right? Without actually running out of money. Try not to run out of money. Make sense? So we actually run, because this is what a life insurance agent can't do for you. They're not investment licensed. So we have options with so many different investment companies, mutual funds, companies out there. So we can run hypotheticals and we can show them, if we put this amount of money in the investments, and this is a scenario, I'm sure this scenario very, very powerful, right? And I'm sure two different scenarios where this person, I highlight the parts to you can see where a person had $500,000 of coverage. So we set it up that this person has $500,000 coverage, and that money is put in an investment for that person, where they can actually take $48,000 a year every single year. So if you look at it, I highlight they took $48,000 a year.
Yes.
That front average by 7-8%, and even after 20 years, guess what happens? The client still has $138,000 left. If you look at it, right, I have the numbers in front of me, right? The client still has $138,000 left after 20 years. Now, check this out. If you look at the middle column, they paid out. Now, they started with $500,000. Now, they've taken $891,000. If you look at the middle highlight, right? They took it over $891,000 during that time frame.
Yes. And
they still were left with what? $138,000. We almost doubled. We're able to stretch that $500,000 over a 20-year time frame where they can have income coming in without touching, right, the principal, and still have $138,000 left. So this is a fun. And again, there's disclosures on the bottom. This is an investment. It does fluctuate. Just to let you know, I have to read the disclaimer, right? So people know. Is number one. It's hypothetical based on economics. So this is actual. If they invested, if you look at the top from 2005 to 2026. So let's say they did for a whole 21-year time frame, and I ran a lot of different numbers. One thing that's so important. One thing I try to do, like in science, they ask you in science, right? They and listen, if you have to do 100 trials to see if something works, right? If you do like a testing, you have to do 100 of them. You can't do 1 or 2 or 3. You have to do 100 to see and how that works. And listen, I've chosen only 2 different, but I could have ran over 100 different funds. I could have ran over different scenarios put together, and I would have came out almost close. Now, some would perform better than others, but it would pretty much make that money last for the person.
Right.
Makes sense during that time frame. And I could do different time frames also. So just to let you know, so what do we do for that person? We made sure that we replace that. We truly replaced the income. Made sure they had $48,000 a year coming to them.
So good.
And guess what happened, right? So they start with 500,000, but because what we did for the person, we last them a much longer time frame.
Mm-hmm.
You see that the power, right? That's very powerful. If you look at the next slide, and it
Mm-hmm.
shows you everything there, how much was taken out, everything, all the details right there, right?
Yes.
That person left with 138,000 after the 21-year time frame.
Mm-hmm.
Very, very powerful. And we look at another fund, another combination of funds, right? If you look at the next slide, again, same thing. This fund performed a little better, right? They ended up with, guess what? Same 500,000, right? We paid out over that time frame. They took $1 million out.
So
They took
wild.
$1 million out, right? And they were still left with 269,000.
Mm-hmm.
The fund average about 9, performed a little better, 9%, performed a little better over that time frame. And it shows you all the, even with the fluctuations of the market, it shows over that period of time, right?
Mm-hmm.
Right. It shows you at 500 that it took $1 million out, taking 48,000 a year. This is the power. So we can, and they're still left with 269,000. This is the power. Wow. This is why, see, a life insurance can't do that for you. They can't do that. So what happens is, even if something happens, here's what happens to most people, Liz. Someone passes away.
Mm-hmm.
Okay, how much? Okay, this is
The check.
Here's your check. And what happens to most people? They're not financially educated. They don't know what to do with it. And guess what they do? Because it was not explained to them the right way. And guess what happened? That 500,000 will be gone in 2 years, 2-3 years. Just like that.
So good. So true.
Because no one took the time to educate them. No one took the time to show, listen, let's have that. Let's use it as income replacement. This is not, you didn't win the lottery. It's about income replacement. So let's use that to replace your income.
Yes. Somebody put that in the comments. Income replacement. Put that in the comments. That's so good. I want to remember that.
Exactly. Your husband passed away. Your wife passed away. Son passed away. Let's make sure we replace that income. Let's make sure that certain amount of money comes every single, right? And have that money last you as long as possible. This is very powerful. And you know the great part about that? We have annuity products also. Annuity products that actually give you guaranteed income for life. I didn't want to blow people away, but there's products that actually, if you put that money, they get the income, they get a certain amount of income for life, right? To start getting that income. And guess what happens? Even when they run out of money, cash, the company is still gonna pay them income. It's called guaranteed income for life.
Wow.
And they can still have that certain amount of money, like maybe that's 50,000, whatever it is, 40 coming for life.
Mm-hmm.
So there's so many different options out there. So the goal is to have, this is why most people out there they don't understand. They sold policies that just hurting them. One of our leaders came up to her this morning, was talking this morning. He said she had this client that got this policy, had an IUL on this, paying this amount of money, got whole life, all these different things. Like, oh my gosh, the client was paying almost 17,000, 11,000 a year total for all the insurance. And they had, I can do this, I can do it. I'm like,
you can't.
And it's just the person is younger person, and like, oh my gosh, that's crazy. But that's what's out there. That's why that's why really kind of inspired me. I need to do an episode to show people the power of using life insurance in an effective way. So if something happens, God forbid, how do we have the death benefit last the person for a long time? And people say, yes, this is what I do. We have the past unfortunate client that passed away. We made sure we have that money in a protected investment for them.
Mm-hmm.
Doesn't have that, keep that money growing for them and also give them income in the future. This is why it's very powerful, but people don't know. This is why we want to make sure that people know that, listen, you need to deal with someone there's a lot of great life insurance agents out there that they want to do the right thing. I don't want people to think that's right, but you need to have a strategy. What happens after that gets paid?
Yes.
What happens next? How do we make that money last you? How do we make that money protection that you have? Make sure you have the right amount of protection, number one, but how do we make that last you as long as how do we make sure the benefit lasts you as long as possible?
Mm-hmm.
How do we make sure that you have that money working for you? And this is one way to do it. And this is what separates us from people
And
to give
agent
the
and
strategy, agent versus life insurance coach. We take it a step further. We go the extra mile for you. We educate you and we go the extra mile for you versus someone that's never, okay, you got this. I don't care if it's 100, 2, 3. Here, you figure it out. Makes sense. So this is why it's important for people to know and people to have the number one, to understand the full benefits of life insurance, what it's supposed to do, what it's not supposed to do. That's number one. And the second thing, how much you really need. Reassess how much you need. It says, I just want to do 100,000 to no, how much you really truly need. And your goal is to get you as close as possible at the coverage that you need at the price you can comfortably afford. That's the second. And the third thing, what strategy do we have when something happens to make sure that money lasts you? What a strategy we're going to use to make sure that if God forbid something happens, that you can make sure that money keeps generating for your family. That money keeps used, effectively replace your income.
Right. So if you do not have a strategy, chances are you do not have a life insurance coach, because a coach is going to show you what strategy will work.
Yes. We don't talk about we don't want to have a conversation with you just, okay, to get you the plan. We'll make sure, okay, if when something happens, this is what we're going to do. So what happens when people see the value, price is only an issue in absence of value. If people see the value, this is why we always teach our reps. Make sure you show them how much we can make that money last them for a while. So guess what? You're not really, if you're not paying premium for 500,000, you're paying for everything else. The 500 is going to bring your family. What it can generate over a period of time. So people need to understand that when they see that, you can't compare. You can't compare. And this is why sometimes we tell reps, we don't have the cheapest insurance. We don't have the lowest cost, but we give you the most value. We'll give you the most value. Because I promise you, you can have something might be a couple of dollars cheap. I hate the word cheap. Cheaper than our plan, less than our plan. But guess what happens? The strategy afterward, there's no strategy afterwards.
Yes, so good.
We showed that although they were playing for 500,000, but how much did it bring a family over that 20-year time frame? Over $1 million plus and count. And count. So really, you are not paying a premium for just 500,000. You're paying premium for not only for the 5, but the length of time what that 500,000 is bringing you.
Yes.
Now, is it worth paying a couple of dollars extra a month to make sure you have that guarantee? The answer is 100% yes. 100%. But if we don't show people the value, they don't never see it. Make sense?
This was so good. This was so good. This one goes in the books. Another awesome topic. My friends, this is it. Life insurance agent versus life insurance coach. He broke it down today so that we're able to understand it and understand the why, especially the strategy behind it. For me, listen, it's that income replacement right there. And to be able to say, okay, so I'm getting a $40,000 check every year. Like, it's really breaking down and having a great strategy. Let's see what the comments are here. Yes. Great job, coach. Thank you. This is so good. Thank you all so much for watching. I know the folks that are watching on YouTube probably saw those images much better, the numbers. Yes, but this is so good to spread the word and to see the difference.
Absolutely. And again, just let you know, those are hypothetical. Listen, it fluctuates as funds, they fluctuate. So I want people, there's nothing guaranteed, just let you know, but it's a strategy used to show. So people know it fluctuates, money. So we have to set disclosure out there because we're investment. We can't just tell them, there's no guarantee.
And I think that's a beautiful thing because every person, every household, every situation is different.
100%.
Sometimes there's illness, sometimes there isn't. Sometimes there's a big high-paying job, sometimes there's a low-paying job, sometimes there's kids, sometimes there are no kids. So every situation is different. So those were hypotheticals there, which I love. But great episode again. Thank you so much, Bernard. Listen, we'll be back.
We're excited. Back next week. Yes, Wednesday. Looking forward to it.
Wednesday, we'll be right here. So whether you watch this live or whether you watch the replay, we are so glad that you are always supporting and you're a part of the Army Empire podcast. We will see you again next week. Bernard, thank you. This is
See you.
excellent.
Appreciate you guys. See you next
We
week.
appreciate you. All right, till next time. Bye.
Thanks for tuning in to the Army Empire podcast. If you enjoyed this episode, don't forget to subscribe and share it with your friends. Join us next week for another exciting edition, and until then, keep building your empire.